How much further does the rally have to go? For more insight, we've got into the market action. Let's welcome Loreen Gilbert. She is Wealthwise Financial founder and CEO. Wonderful to have you with us, Loreen. Your take on how the market just continues to press higher and how much this is fundamentally driven or flow driven.
Right. Well, there's not much in the fundamentals when we look at, certainly technology has been leading the charge here, and that's great for technology. But the rest of the market, if we look at the S&P 400, is still down around 13%. The S&P 600 is down around 19%. So we have not seen a broad-based rally across all areas of the market, certainly not all sectors and not all capitalizations. So while there has been optimism and we're seeing some great numbers come out, some good data on ISM numbers, that's been very positive, but the weakness still remains in unemployment. So there are still risks in this market.
Yeah, there are still risks. And when we talk about sort of the dominance of the large cap players, the mega cap names, Loreen, there are some people who would make the argument that you don't necessarily need the mid caps or the small caps to confirm the rally, given the outsized importance of Amazon and Apple and Microsoft, et cetera, not only in the weightings of the indexes themselves, but also really in terms of their contributions to the economic activity. What do you make of that?
Well, I think when we do know that we're starting to see a recovery is when we'll start to see the small and the mid caps also rally. But I do think when we look economically and we look at GDP and the importance of all of those companies, there certainly is a need for the small and the mid-cap companies as well as those mega-cap companies when it comes to our overall health of our economy.
So need a focus on the small caps. I'm also interested on where you say in the cash situation currently stands. Are you fully committed at the moment, fully invested? Are you keeping powder dry to get in at further market dips? Where do you see how much one should be playing in this rally at the moment?
Right. I do think having some cash on hand is important, and we have been holding around 10% of our portfolios in cash to take advantage of dips that we see. And we think this, as we see the Q2 earnings, we do think there will be some dips in the market, especially when we see that year-over-year decline of what we're expecting as far as earnings are concerned. I think there'll be nervousness in the markets as far as the reality of where companies are. And then also, as we shift towards looking at an upcoming election, I think we're going to see some volatility in the markets there as well. So that's the time to take some cash and enter into the areas that we haven't seen as much of a run-up in.
So with regards to just general sentiment out there, Loreen, is the idea right now that a lot of market participants are really sort of focused on more monetary policy support from the Fed and potentially more fiscal support from Washington?
I do think that this has been a Fed-driven market and a stimulus-driven market. In other words, no matter what happens, if the pandemic improves, people will still win. And if the pandemic worsens, the Fed has made it clear they're still going to step in, and so people win there as well. So in effect, investors, having heard that the Fed is going to be the backstop, are feeling very comfortable being buyers in this market.
I'm interested in your focus on Europe and Asia as well as the United States. It's interesting today we got some pretty disappointing data out of Germany which held back European stocks. We've also got warnings from the European Commission earlier saying, look, that the recession's going to be harder than we had previously expected. What do you make of time to put money in outside of the United States?
Right. I think it's time for investors to be looking beyond the U.S. borders once again and look at Europe as a possibility in the same way that we have had all the stimulus and that our markets have been driven by that stimulus. We're seeing the same thing that's going to be happening in Europe. The 750 billion euro package, that is going to stimulate the markets. And then if we look at the forward PE ratios and the dividend yield, so the forward PE ratios have been very low, the dividend yield is high, there is quite a bit of opportunity there. Once again, it's still a stock picker's market, but I would say looking at Europe and also looking at the potential strengthening of the euro. And as we see a strengthening of the euro, that will translate into return as well.
Loreen, great to get your thoughts today. Loreen Gilbert, WealthWise Financial founder and CEO.